So businesses, I think a lot of business owners are just getting kind of this information. They're used to just paying for an insurance, saying what they want for coverage and getting it. Now it sounds like that's changed because they have to live up to certain compliances, technology standards, and then prove it to the insurance carrier is what it's sounding like. Is that how you see it, Robert?
Uh, Kind of. I mean, standard policy has about 15, 16 areas that the carrier is going to provide limits of coverage for. And that limit
Okay.
is going to be based
Yeah.
on limits going to be based on an analysis of what you've done proactively and how that
Okay.
looks on a risk scale. As an
Okay.
example, let me take a look here. I have the whole PCI fine thing. If like we were working on a risk analysis for a Northwest customer up here, a restaurant chain, and they outsource
Okay.
all of their PCI DSS risk to another company who does cash transaction and order taking and customer data acquisition and excuse me, customer data
Yeah.
acquisition and protection. So we did some analysis on the risk of their public web presence, and this company who said they were PCI DSS compliant and was accepting all these cash transactions and brokering all this customer data. So we took a look at that and found out that the protections being offered by their PCI DSS transaction broker were pretty weak. And when the insurance company looked at them, they had a similar opinion. So the insurance company recommended that they would sell them $2 million in coverage. But last year in 2022, the average settlement cost for a PCI DSS break-in was $145 million on average. I mean, that means
So $2 million is like a drop in the bucket if there was a real breach.
Right. So the insurance company is taking a look at what you've done and saying, okay, the risk of this happening is extremely high. Do we want to accept the risk and pay out $154 million, or do we want the business to do it, or do we want them to ask us why it's so low? I don't have any view into the underwriting shop for that insurance company, but that was shockingly low amount of coverage being offered by the carrier.
Wow.
So I'm sure they have
they're outright getting really risk adverse in the cybersecurity worlds. And now, if you're thinking about the underwriting process, they must have some technical people now taking a look at that risk to make that judgment call, I would assume.
I would assume. I'm sure they have folks who they've either hired and trained or hired out of, the university system, or retiring CISOs who understand the technology, understand the risk, and can do that analysis and turn it into normal people understandable business speak. But the underwriting process is interesting. I mean, things that we think of every day as risks in a business sense, I don't think people have a good idea of how to quantify it. As an example, everybody talks about data breach and breach response. I mean, the average carrier recommended coverage is $2 million. However, in the last 12 months, the average payout was bordering on $10 million. So what does that mean? It means the carrier wants you to pay out of pocket $8 million, or they want you to ask the questions so they can underwrite $10 million of risk? And what happens in the next 12 months? Is it going to go up to 12 million average payout or 20 million? Nobody knows. So it's like, where do you as the consumer, as the business trying to manage your risk, so an event doesn't wipe you out, where do you find that happy medium between looking at the last 12 months of payouts and what's going to happen in the next 12 months? Is that going to escalate? Is it going to stay the same? What has it done? And the trends from the last 10 years are very poorly documented. So it's hard to build up that solid underwriting kind of platform of information, year to year to year,
Yeah.
going backwards.